Hi guys, we're back. Ray Cousins here, Light Forex Trading Community. I'm very excited to be here today with another one of our top level market analytics and trading sessions. Today I'm going to follow up a direct follow-up on a trading session we had almost exactly 1 month ago, titled Wall Street is Coming Back from the Dead. And I was clearly suggesting that we're looking at a tipping point and at a potential upside reversal on a large scale. I was talking about the medium to long-term perspective, and I also took action, right? I actually established a bullish position on the S&P 500, and I want to go back and check up on that, right? I want to follow up on what happened ever since that that session we had a month ago. So it's going to be super interesting. Stick around, and if you're ready, let's dive in. Alright, so before we move into an in-depth analysis on Wall Street, I do want to quickly touch base on our last session, kind of follow up and give you an update on the situation with the euro dollar. Just a couple of days ago, I declared that there is, potentially speaking, a massive move to the downside that could trigger. And I actually pulled the trigger. I actually established a short position. I started very, very small, and I did specifically mention my official trigger level, which was the bottom key level, 1255. Very, very strong support. And I specifically said that only if when price breaks that key level, only then I will declare a full-fledged downside move on the euro dollar. Now, take a look what happened, right? So as we entered the trade, price went down very nicely, no doubt. However, yesterday, well, actually just today at the beginning of the trading session, it slightly spiked here, that bottom key level 1255. You can see how it touched base here and began to turn around, right? Now, that's not a very good sign, I have to say. So I decided to pull out. I pulled out, I closed that position, and to be honest, I think there's a very good chance right now price could actually reverse to the upside, since it made such an important touchdown here on the 1255, kind of trying to tell us that this level is a strong support and it may actually hold, right? So I'm putting my long-term bearish conviction on the euro dollar. I'm putting it on the slow burner, so to speak. I'm putting it on the side for now. I'm actually taking a bullish stance, at least from a short-term perspective, and I thought I should keep you posted with regards to that. That was just a couple of days ago, by the way. So we're still going to use that 1255 as our official trigger level to trigger a long-term, kind of medium to long-term downside trend. For now, it looks like we're still stuck inside the limits of this C-matrix setup. Alright, so that's about that euro dollar. Let's move to Wall Street, right? So Wall Street is represented, as far as I'm concerned, is best represented by the Dow Jones and the S&P 500. I want to start with the S&P 500 actually. And I'm showing you here the big picture, right? It's the weekly chart, and I was heavily involved here with the S&P 500. We noticed how price came with a swift turnaround. It was quite surprising, to be honest, because at first we noticed that price was breaking the bottom key level. Remember that 24.48? And it was also closing the weekly bar outside, right below that last line of resort. When I went to the Dow Jones, I noticed that here it was actually having a lot of respect to the same bottom key level. By the way, you can see they're trading in the same formation, right? We're talking about the trading range that started back at the beginning of 2018. Now, in this sideways movement or trading range, we can see 3 legs, basically. 3 legs are fully completed, right? A very well established 3 legs. We see the same in the S&P 500. Let's take a look. I think it's a little bit, the S&P is a bit more volatile, kind of more violent, less respective to the key levels here. We can see the violation we had here coming from the weekly chart. But like I said, when I noticed that break, I checked on that Dow Jones, and in the Dow Jones we saw that amazing reaction to that same key level, right? In this case, the 22262, we talked about that key level. And then, of course, came that turnaround. So I went again and I checked on the S&P 500. I took it to the monthly chart. I just wanted to filter out to see whether there was some noise coming from the weekly perspective. And I did find out that it was just a lovely spike here on that 2448, and price made it all the way back and closed the month back inside, right? And then, of course, price shifted its direction and began to lift off. So that's pretty much where I took action, and I took action on the S&P 500. So ever since then, let's take a look. A month ago, right? Price was right here, right after that turnaround. What I said, when I came up with that session title, Wall Street is coming back from the dead, what I said was that price is probably just continuing its natural sideways movement, right? Because this is what seems to be. It's not really a downside correction. It's more of a sideways correction. Now don't forget what we're correcting here. We're correcting a trend, right? An upside trend. I'm talking about the grand trend that it started 10 years ago, right? At 2008, the end of 2008, almost 2009, just a huge upside trend, an unbelievable trend. It started right as the credit crisis was coming to an end. And ever since then, price was on the upside, right? With a few downside corrections, but this is one part, this is just another example of a downside correction, but it's more of a sideways movement, right? So what seems to be going on, when we noticed the price was just failing to genuinely break down on that last line of resort, both in the S&P 500 and the Dow Jones, we knew that we're probably expecting the next fourth leg, right? We had 3 legs so far. We should expect the 4th leg, and I specifically mentioned this higher section here, right, with my price target at 27.95. 27.95. That is my official price target and my last, my final destination. Not to say that it couldn't, continue higher. It could, and it probably will. But I have to respect this key level 27.95 because it's a massive resistance. That's the mid-high key level. And it's the same with the Dow Jones. We're talking about 25,855. That's the mid-high key level here. So we're getting closer, right? We're closing in very, very rapidly on that higher section. I mean, the Dow Jones is just, that mid-high key level is just around the corner. I think we're going to make it probably in the next few days or so. The S&P 500 is also pretty close, a bit farther than the Dow Jones, but also very close, getting closer every single day. And at 27.95, guys, I plan to get out of my bullish position in the S&P 500. At that point, obviously, price could, potentially speaking, begin to capitulate and move, and basically try to move back to the lower section. Like I said, I think price will be able to break through, but at that point, once it makes it above 25.95 here, I think we're getting into the danger zone. At that point, it's hard to predict in which specific point price will reverse, because I think it's more likely that we'll have a fifth leg rather than a breakout on that fourth leg. You know what I mean? I think price is more likely to produce a fifth leg, which, by the way, could break down this time for real, because the fifth leg is usually the one that breaks down a symmetric setup such as this one. This is why I said, if you remember back then, a month ago when we were talking about Wall Street, I said that it's not likely that the fourth leg, oh sorry, that was the third actually, right? It's not likely that the third leg here would break the setup. It's more likely that the fifth will do so. However, we could also witness a sixth leg, right, in case there's not going to be a breakdown, and in which case, by the way, the sixth leg is going to be the last one, and we will have a break up. Now, I took you know, this is kind of a long-term analysis here on the S&P 500, but if I'll take it to the short-term, let's say short to medium-term perspective, then we're expecting to hit our price target at 27.95, the same with the Dow Jones in relation to its, you know, main key level that we just saw. So I expect those two to keep trading in perfect synchronization, right? I expect these two indices to hit their you know, higher section, and then we'll have to step aside. That's my plan. I'm going to step aside, stay on the sideline. I want to continue to reanalyze the situation. Once we hit that mid-high key level, I want to see the reaction. If we're going to have a clean-cut break, that means price is probably going to deep into the higher section. It could take the previous high even around the levels of 29.50. Well, 29.40 actually. So there is some more potential to the upside, but I'm not sure I'm going to be involved in that part, right? And of course, if we'll have a big reaction, right? If price will just, you know, it will be obviously trying to break, but at the end of the week, just leave a spike and keep itself below 27.95. That's actually going to be a bearish sign, right? That's going to be an indication that price could reverse at that point and head straight to the lower section, in which case we will be looking again at the level of 26.12, right? All right, that's pretty much it. Very much bullish outlook on Wall Street, S&P 500, Dow Jones, and basically the rest of the stock market, because that's the implication when you analyze, you know, the big indices such as the S&P and the Dow Jones. Guys, I hope you enjoyed that session today. I sure did. Don't forget, subscribe to our channel, follow us, and that's about that. Have a great trading day. Till next time, be well.